now going to pass you over to Simon, who is going to present our findings. He's going to talk for about 20 minutes, and then we would like to take some questions. If you'd like to ask a question, please refer to the Q&A button at the bottom of the screen. We'll try to answer all your questions by the end of the presentation. Thank you for your attention, and now over to Simon.
Thank you, Olga, and hello and welcome. As Olga says, we're very pleased to have such a wide spread of different people from different places, certainly in Europe, and I think one or two from the States and Cayman as well. So welcome to you all, and glad you could join us. For those of you who don't know us, IFI Global is a research and media firm based in the City of London. I say research first because we are slightly larger a research firm than we are a media firm, and we will be doing a lot of research, particularly this year, on ESG related projects. I'll be mentioning one or two of those items during this presentation. But we also have 3 publications. The briefing report, which we launched in January last year, is one of those 3, and that is dedicated to tracking the changes that will be occurring to the fund industry as a result of ESG. As Olga says, I'm going to talk for about 20 minutes to allow some time for questions at the end. If we do get a lot of questions, I'm not sure we will, but if we do, then we can always go over the half-hour mark. Now, we believe very strongly that ESG will impact most areas of the fund industry. When you see presentations or hear discussions on ESG, they're almost always on the top item that is on this list, the investment strategies, processes, and goals. Very important as that is, a lot of other people have covered that. We're not going to touch upon that today. We do touch upon it, of course, in the briefing report. What I'm really going to focus today on is the bottom 3 items on this slide. But I would like to say in passing, make a comment on the industry's peripatetic structure. Whatever you do, don't tell the environmental movement how at least the European fund industry is put together, with a portfolio manager in one place, service providers in a number of different places, directors all over the world, ditto the distributors. That's a pretty huge carbon footprint, at least when there isn't a pandemic going along. So we may come back and talk about that in more detail, how ESG may conceivably in the years ahead change the structure of the industry. But as I say, I'm going to focus on the bottom 3 items on this slide. But before I do that, I thought it would be worth giving us all a refresher of where we are with the growth, the extraordinary growth of ESG investments and assets around the world. JP Morgan forecast sometime last year that by the end of last year, we haven't got the figures in for the end of last year yet, obviously, that ESG assets, all forms of assets, separate mandates, funds, whatever you call it, would reach about $45 trillion by the end of, as I say, December last year, which is quite extraordinary given that the whole ESG movement only began in the noughties, in the early noughties, to see how far it's come. Of course, it very much depends what you include, what you count in that, but no matter how you count it, it really has been quite extraordinary. Institutions supporting the UN's PRI have at least 70 trillion in assets, and those are just institutional investors. There's other forms of investors too, so we've still got a long way to go, arguably. Last year, ESG fund assets in Europe passed the $1 trillion mark, and in the 3rd quarter, which is the last quarter we have the full figures for, we saw that, according to Morningstar, 40% of all inflows into European funds were ESG. So nearly half of all inflows in Europe into funds were ESG related in that 3rd quarter. On top of that, we now have Joe Biden in the White House. He's made a very strong start in terms of already mentioning what he's going to do on ESG. Just yesterday, he appointed his I think it's John Kerry, to his new role in that. He campaigned very heavily on his Green New Deal. And I think he's serious about what he intends to do here. So the US is finally coming to the party too. And I love this quote at the bottom of the slide from Olivier Carré of PwC, who was asked, who put together a report on ESG for PwC, who called it a, quote, once in a century opportunity. So I'm now going to move on to fund governance, which is an area we know, we like to think we know an awful lot about. We have a publication called the NED that's been around for 10 years. So we've been tracking fund governance for a long time now. It was surprised to see when we first heard about it, when Refinitiv's D&I Diversity and Inclusiveness Index first got going, how poorly asset managers do in that. The only asset manager that appears in the Refinitiv D&I Index, certainly in the top 25, if not the top 100, is BlackRock. But strangely enough, other firms that are like Accenture that came top, and KPMGs and other firms like that did very well in it. So it's interesting that fund managers have done so relatively poorly. One of the reasons perhaps might be that the board composition of funds is not particularly diverse at all. We did some analysis at the beginning of last year looking at the largest, AFM stands for all authorized fund managers in the UK. That was after the FCA mandated the changes to independent directors, which was the year before last. And we, despite the fact they had to add 2 independents to their boards, authorized fund managers in the UK were still not particularly diverse. And 30% of the managers we looked at, which was the largest, the best known ones, had no women on their boards at all. 18% had fewer than a quarter. Goldman Sachs Asset Management is only one of the examples. Others have said the same thing. They are now staying, they said this in the beginning of last year, they will not invest in any corporates, any companies without a woman being on the board. So it's really, in the asset management industry, it's more of a case of do as I say, not do as I do. Now, these next 2 slides here, this is hot off the press. We have been analysing from a variety of different points of view data which we've got hold of from the SEC's form ADV, which includes board composition data. And this is all international funds, I should add, funds domiciled in Luxembourg. The form ADV includes funds domiciled in any jurisdiction, not just the US or Cayman. So Luxembourg, Ireland, the Channel Islands, Cayman, of course, a lot of Cayman funds in there too. And we just took those funds domiciled in the recognized obvious international fund jurisdictions. We've done about 50 of them so far. We're analyzing them from a whole host of different ways. And for today's presentation, this will be in more detail in the next issue of the briefing report. We wanted to see how many of the managers included women, even just one woman on their board. So here's quite a lot that have 100%. And then on the next slide, we go very quickly down to some that have none whatsoever. At the bottom of that list, you'll see that there are 765 funds that have been reviewed. 454 have women on the board. That's 59% that do. Another way of saying the same thing is that 41% do not. So 41% of these managers would fail the Goldman Sachs test. I'm now going to move on to the subject of investor due diligence, or due diligence in general, and starting with investors. Those that do ODD on behalf of investors are now asking managers questions such as these, those questions on the screen, as well as stuff on sustainability, etc. These questions, by the way, are taken from the questionnaire that Castle Hall, which is a well-known due diligence firm, sends to managers that pension funds it works for are looking to invest with. So Castle Hall has, I believe, now well over 100 pension fund clients around the world as clients. Typically, they're in places like Canada, Australia, Northern Europe. Those are the ones that are keenest on this. But as the guy who runs Castle Hall has told me, the Americans are catching on fast. They're getting into this too. And as the American institutional market starts asking questions of these, like these, in their due diligence questionnaires, that really is a game changer. So I think we're going to see more of this, much more of this, arguably, in the foreseeable future. And these are just a few examples. There are many, many more. I just picked some out for the points, for the purpose of this presentation, of the kind of questions investors are asking of managers when they're doing due diligence on them. So does your firm have a code of ethics? That's an obvious one. Does your firm have a policy against discrimination? and many other ones like that in its social and governance area. In the HR area, they want to know, this is the Castle Hall questionnaire, whether there is someone in your organization responsible for promoting diversity and inclusion. And they get into staff training as well. Do you offer training to employees covering microaggressions, mental health issues, positive behavior, unconscious bias, and a whole host of other things that I didn't put on the screen, but I'm sure you get the idea. Now, our contention is that questionnaires like this, which are higher up the food chain than we're dealing with today, will filter down, and we will see similar questionnaires sent by managers in the future to their service providers, particularly if they're looking to launch an ESG fund, but perhaps even for normal funds, even if it's not an ESG fund either. After all, these managers on their portfolio management side are also doing this when they're looking to allocate money from the fund to a corporate. They need to know about the potential corporate's supply chain. So this, I think, is coming, which brings me on to a survey that we attempted to put together late last year at the briefing report, which we sent to, I think there's a few people on this event today who got this. We did a survey, as I say, to service providers, including questions such as the ones that are on the screen at the moment. We got an astonishingly poor response, to be absolutely brutally honest with you. One or two of the people that responded to us even asked us, well, why are you sending us a questionnaire with questions such as these? Quote, this has nothing to do with us, unquote. That in itself is a very interesting finding. Clearly, this survey was way ahead of its time. Hopefully, in the future, we will be able to do something like this again, and we will get a better response. We do think it's changing. Things will happen in the foreseeable future. We'll see service providers taking up the kind of matters that are on the screen at the moment. What we are doing in the meantime is tracking at the briefing report service providers' ESG take-up. We are looking for, and please do send us, some of you have been doing that, thank you very much, and we want much more of it. Please do send us anything that is factual that you're doing that's ESG related. We, to repeat, are very keen on getting that, and examples of factual stuff that we've been getting or we've been finding out for ourselves as well are on the screen at the moment. These are the kind of things which are measurable that we want more of. We sometimes hear from people saying, this is service providers we're contacting, that they're committed to being, they're committed to a greener future, or they're an equal opportunities employer. We consider that to be declaratory. It doesn't mean very much. Everybody, of course, is in favor of ending world hunger, etc. We want specific measurable facts. If something is considered to be what we would consider to be a PR exercise, we won't necessarily be including it, but we are interested in anything that, to repeat, is measurable. So I'm now going to come on to fund domiciliation. We believe strongly that fund domiciliation and ESG is both an opportunity and a threat. The opportunity is that we think some jurisdictions have the opportunity to develop a certain expertise in a certain area of ESG, and once they do that, there is a good chance that funds will follow them to that particular jurisdiction, and they may become the go-to place for some form of environmental investing or social investing, whatever it may be. In the same way as that today, Cayman is obviously recognized as the leading offshore hedge fund jurisdiction, or Luxembourg is recognized as the leading European retail mutual fund jurisdiction. There could be equivalents for ESG in the coming years. So that's the opportunity. On the threat side, I say this quite often, and I make no apologies for repeating myself again here today. I do think the industry, particularly in the ESG era that we're in, has to get its act together to counter people like the Tax Justice Network and other tax activists who have been putting out what I would say is pretty negative propaganda, not just on the offshore centres, but also on Luxembourg as well. It's never countered. I think that's the problem. And some of you may well not know this. It's looking like Cayman will go black onto the EU's blacklist. That's in part because of the Tax Justice Network. The European Parliament just last week, I think it was, certainly in the last few weeks, has voted to extend the offshore blacklist. And they specifically cited Cayman as a reason for doing that, because Cayman was on it from February last year to October last year, came off in October, made a lot of the MEPs very unhappy. So they want the blacklist extended. Now it's not the, and they voted very heavily in favour of that, quoting figures from the Tax Justice Network. And it's not the Parliament's decision, I should add, it is the decision of the European Council whether they do that, but the European Council is under pressure to do more of what the Parliament wants. So finally, before we go to questions, I see there are 1 or 2 questions, good. Let me just tell you what we're doing at the briefing report to sum up some of the stuff we've been talking about this afternoon. We are going to be tracking the take-up of ESG practices by the fund industry, especially including by service providers. We are about in February to start a research exercise or consultation exercise leading to a research study. We're going to be consulting with our subscribers to conduct a research study to examine managers, service providers' selection for their ESG funds. I'm really looking forward to that. That should be a very interesting project. Now we are also consulting, we haven't got into the consultation yet, I'll come after the research, but it's in our minds to consider the possibility at least of doing an index a little bit like Refinitiv do with their D&I index, but on ESG for fund industry service providers. We are well aware of the fact there's huge differences between very specific boutique service provider, perhaps in Guernsey or Jersey, and say a global bank that's a service provider that may be in Dublin and Luxembourg. So we are aware of that and we will obviously take that into account, but we're certainly looking at that as a possibility and we will be consulting on that. And we would very much welcome industry input on that idea too. And finally, we are doing and will continue to do many more reports on service providers ESG take up, not just in the publication itself, but also we have a thing called SAS, which is a thing called Selection Intelligence Service. It's for any managers looking for information on service providers, so we can supply them with that. And on that note, I will stop my very quick rush through my presentation. I will stop sharing screen. I see, Olga, we have some questions. Hopefully this will work. Great, it seems to have done. Do you, any questions? Yeah, do you want to read out the first one?
Yeah, hi again. So now the first one. How do you define service providers? Is it just administrators?
Good question. It is, of course, administrators. No, it's not necessarily only administrators. They're the obvious place to start. And that is where we have been focused, to be honest, to date. But there's no reason why it can't and shouldn't include other forms of service provision, including potentially offshore law firms and the other firms that act as service providers to the fund in the international jurisdictions. I think what we will do is focus at the moment just on the administrators and very much hope and expect and intend to get to the other ones, including, as I say, the law firms, maybe including, we have done some work, a little bit of work in the past, recent past, with Manco hosting platforms in places like Ireland and Luxembourg to see what they're doing on ESG. But we probably will leave that for a little while yet.
Okay, can I move to the other one?
Sure.
That's what, it is difficult to have more women on fund boards because there are not a lot of them with the right experience at present, but this will improve with time.
Yes, that is a fair point, whoever made that point. That is clearly the case. However, there's all very well to say that, and it's as time goes by, there will clearly be more gender diversity on boards. And one thing I didn't say in the presentation, perhaps I should say it now, gender diversity shouldn't be the only form of diversity that people look at, but gender diversity we see as a marker. It's very difficult for us to analyze board composition and see if there's any other form of diversity there. And we strongly suspect if funds are not being diverse by gender, which we can see because we obviously can identify a female name, then it's very unlikely they are doing anything else that's diverse for their boards either. So gender diversity, I think, is a kind of good proxy. But as to the question that person has asked, clearly as time goes by, it will get better. But on the other hand, managers are going to corporates and saying the same thing to them, that they've got to have women on their boards if they want to get an investment from that particular manager. So if they're saying that to companies out there that are looking to invest in, they should at least be able to reach the same standards as they're asking the firms that they're looking to invest in to do. I would have thought that is to me anyway, is a given.
Okay, can I move to
Please, yeah.
the other one? It's not the last one yet. So by mixing together environmentalism with the social and governance sides of ESG, is it too broad to be meaningful?
Yeah, that's a huge question. I have sympathy with that point of view behind that question, but it is what it is. This, as you probably all know, the ESG started with Kofi Annan when he was Secretary General of the UN, not that long ago in the early 2000s, as I mentioned in my presentation. It was clubbed together, environmentalism, the social and the governance. Why it was, I do not know, but it was. And that's just the way it has been. There's a very good argument, which is implied in that question, to say, if we are at the sort of size of assets, what did I say, JP Morgan, 45 trillion or something insanely large like that, that it really should be broken out in different ways. I think I have a lot of sympathy for that. But the point is, it is what it is, and we're going to, it's basically investing that goes beyond just return. It's looking and investing to do good, if that's not putting it too simplistically. That's really what ESG is. That's why you club together the social stuff with the environmental stuff and good governance. You're trying to make the world a better place. And as the new generations come along, and I've got two children, one at university and one who's left university, look at the world from their perspective and their friends' perspective, these things are not going to go away. They are going to, when they get into investing, and that generation is beginning to get into investing, they're going to want to do, I think, investing which has a social dimension to it. And they're certainly going to be on the planet, hopefully, for an awful lot longer than many of us on this call are going to be on the planet, and hopefully they will have children, and on it goes. So they have a different perspective from some of us older types. Sorry, I waffled on a bit. So we've got more questions coming in.
We do, and it's a long one, so we got to brace ourselves. So what about the role of fund service providers in providing ESG reporting and compliance services to fund manager clients? What do you see as threats and opportunities for fund administrators to provide these services in a world with increasing mandatory ESG disclosure reporting?
Well, as the person who's asked this question may well know, that's a very hot topic at the moment. I can't give a clear answer to it. And one of the things that has come along, I haven't mentioned it in this presentation, perhaps I will touch upon it just for a second now, is the SFDR, that's the European Union's very comprehensive ESG regulation that starts to come in only in a month. I think it's March the 10th. It's coming in various stages. There was a bit of a kickback from the industry to some of the reporting that's going to be required now, which is apparently amazingly complex. So administrators are going to have to get on top of that. It's going to be a huge job. They've got whatever they've got in terms of time to get their act together for that. It's going to be, I think, for an administrator, a big headache. Just whilst we're on the subject of regulation, that's what the EU's doing. The UK, we had an e-event on this only a week ago. We just looked entirely at the subject of regulatory divergence, and a lot of it was to do with ESG. The UK is not going down that route. It's going down the route of what it calls the TCFD, and that's a whole different kettle of fish, which we won't get into now. But yes, there's going to be, especially if you're in the EU or if you want to distribute your funds in the EU, there's going to be an awful lot of mandatory reporting requirements for administrators coming up.
Okay, can I move to the last one?
Please.
Yeah. Surely managers and service providers have no choice. Will any that don't change still be in business in 5 years' time?
Very good question. And thank you, Christopher. Most of our questions are anonymous today, but you have identified yourself. I don't think that, well, it depends on what you think is going to happen to ESG. I think it's going to be very difficult to be in business in 5 years' time. And if I was planning strategy for a service provider, or not just a service provider, but anybody involved in the fund industry, I would strongly recommend you get out ahead. You don't want to be getting the same kind of questionnaire that Olga and I and others at IFI Global sent to the service providers late last year, and not to be able to answer those questions when that question comes from a client. It's fine to decline that kind of questionnaire when it comes from us, but when your client or your prospective client sends you a questionnaire like that and you can't answer it, you're going to be in real trouble. So you don't want to wait until you get the questionnaire. You want to have the answers ready when the questionnaire comes in. So you've got to diversify, in my view anyway, very quickly if you haven't done anything about it. And I have to say, the risk of repeating something I said in the presentation, from what we discovered late last year, a lot of them haven't done anything about it. It just hasn't occurred to them. They're busy doing their day job, and it hasn't been something they've really focused on. The point of this presentation is to say, you really should start focusing upon it now.
Actually, I lied. There is one more question.
Okay, another question's come in,
yeah. Another long one. So, on the subject of women on boards, there is a drive in the UK listed investment sector to positively recruit women. To what extent will your board reviews examine whether such appointments are based on merit rather than positive discrimination, which is unlawful?
Yeah, that's an extremely good question, and very contentious. It's a very contentious area, as we all obviously know. And that's something that whether it's racial discrimination, positive discrimination, gender positive discrimination, or other forms of positive discrimination, or if it's not that, it's a very contentious area, and it goes well beyond the areas we've been talking about here this afternoon. Very difficult to judge, to answer that person's question, whether it's positive discrimination or whether it's discrimination at all. When you're trying to compare two candidates, one may be a pale male stale person like me versus a younger woman, why pick one person over another? Okay, if it's clearly one person is more experienced, perhaps that's easier. If it's a bit blurred, it's not. It is difficult, I agree, it is difficult, but it doesn't negate the fact this is happening. There is going to be quote unquote positive recruitment of women. And by the way, whilst we're on the subject, the Central Bank of Ireland, I think, has strongly hinted, not just in the UK, so it's in Ireland as well. The Central Bank of Ireland is very positive, strongly hinted. I think it's going to start coming in with quotas for women on boards, not just for fund boards, but women on all forms of boards. It's made several comments in regards to the fact that boards do better with women on, including fund boards, all boards. And I think that is the direction of travel, whether people like it or not. And that's just the way the world is going. Is that the last one, Olga? I think it may be. And I see it's the bottom of the hour. We got to 2:30. So we managed to time that quite, reasonably well in terms of length of presentation and questions. Thank you very much for joining us. We'll be doing many more of these. Some of our briefing report forums are going to be just for subscribers. Some of them, when we do presentations like this, will be more open. Hopefully you can come and join us in the future for other things we're doing on this nature. This is a huge subject, and we'll be doing many, many more things in this area. I think we're about the only publication that's dedicated to it, and there's an awful lot of stuff for us to get stuck into. So have a good afternoon, or if you're in Cayman or the States, have a good morning, and see you hopefully again very soon. Bye-bye, everybody.
Bye-bye.